Hello and welcome to episode 4 of the Sunday Analysis series. Without wasting any time, let's get into this week's forecast. As always, we will begin with the Aussie dollar, AUD/USD. Last week, the Aussie dollar was at this price level here, 0.6870. I expected price to reject from this area here, but it continued to go upwards, and my last level of defense was 0.6900. You can see it in the previous video, episode 3. I expected price to stay below 0.6900, which it eventually did, and you can see that it just made a bullish candle here, broke above the zone, but immediately after that it started creating bearish candles, and eventually it hit my target level here. Like always, guys, trading is really simple. You really don't have to overthink anything. Price just came to this level here, found resistance at this level, and began to drop down. It has come down to this level. As I always say again, price moves in steps. So we might see a retracement on Monday. On Monday, we might see a retracement from this level here, or it might come down and come find support here. But I really doubt it may break below 0.6700 for now. For now, I'm expecting a retracement back to, let me bring up my Fibonacci. So I'm expecting a retracement back to 0.6850 or 0.6870. That's why I'm expecting a retracement. There's a high chance it might retrace back to this level because there's a lot of supply at this level. You can see the bulls were trying to come into the market here, but the sellers were too aggressive in this market, and price sharply reacted from 0.691 here. Price sharply reacted from 0.691. The sellers came in with full pressure. The bulls tried to come in, but the sellers still maintained their momentum. You can see price still found dynamic resistance at my moving averages here. So all these kept me in the trade. So this is what kept me in the trade. Some of you traders might have taken away your profits from this level here. After seeing this bullish candle here, you would have been scared that price will begin to reverse. But I gave a signal in the Telegram channel where I told traders to take a specific amount from the market and allow a certain percentage to continue running. Price continued rejecting from the moving average here, leaving wicks behind, showing that the bears are in control of the market, and we continued to tumble down. Now we are 0.6724. So again, we might see price begin to reject from this level here, or 0.6700. I doubt that it may break below 0.6700, and we might see price come up to 0.6850. You might see price come up to 0.6850 or 0.6800. Let me draw out the zone for you. Around this zone here, you might see price coming to reject around this zone here. This zone here, let me change the color to red so that you may see that this is a danger zone. So we might see price coming to reject around this level here. So watch out for selling signals around this zone here, and remember to apply good risk management when you decide to enter the trade. Price hit the take profit and gave us 125 pips in profit, which is really good for us as swing traders. And for now, I'm going to sit out of the market, and I'm going to see how price will react during the week. We come down to gold. Okay, for gold, last week closed at this bullish candle here. Gold closed at this bullish candle here. We have this bullish candle here, where I expected price to begin to reject from this level here. I expected price to stay below 1860. You can see it in the previous video. Expected price to stay below 1860, and if it was to reverse, it might reverse from these weak rejections here. These weak rejections that we had on our spinning tops here. These spinning tops that were caused by the news the previous week. So price came and reacted very well to this level here. We had an engulfing bearish candle here, and we had a moving average crossover here, giving us confluence to enter this trade. I never entered this trade because I had the Euro USD trade open and the AUD USD trade open. So it wouldn't be a good idea for me to come into the market. A trade is never guaranteed. No matter the confluence that it's giving you, a trade is always never guaranteed. So now if I was to enter this trade, I would enter from here with my stops at 1855, with my stops at 1855, and I expected price to come down to 1800. My take profit at 1800 here. This is a good 28 pips. On gold, 28 pips is really good. On the smallest lot size, that's $28, which is really good. So for gold, we might see it continue tumbling down. So that means Aussie dollar might see 0.6700 when the market opens. If it was to retrace, it might retrace back to 1830, finding resistance from its previous support level. You can see gold also stayed below the moving averages, found dynamic resistance on the moving averages. Here we had bullish momentum here, but price still stayed below the 8 EMA. Again, here the bulls tried to come in, but price again still stayed below the moving averages, and we continued coming down. You can use the moving averages as tools to manage your trade, because most of the time when price prints out a candle that's not in line with their forecast, most traders begin to start panicking. So for example, here I was in a sale and price printed this bullish candle at this support level here. Most traders will start to panic and would immediately close their position in fear that price might begin to reverse. But you can use the moving averages as management tools for dynamic resistance. As long as price stays below the moving averages, our trade is still valid. We go down to Euro USD. So last week for Euro USD, we closed at this level here, where I expected price to stay below 1.0705, and it came up to 1.0705 and created this pin bar here and continued to tumble down. So again, Euro USD, the trade I entered, price hit take profit, giving us 123 pips, which is very good for a currency pair and a swing trade. On the smallest lot size, this is basically $12. On a standard lot size, this is $1,000. So it's a really good trade, really good profit. So I'm expecting price to come down to 1.0500. This is where we might see price reaching, and when it reaches here, we might begin a retracement to come find resistance at 1.0650. So we'll see how price develops during the course of this week. During this week, I think I'm not planning to take any trades, but if price shows me signs of any confirmation, I will take the trade. I usually don't take trades on retracements because retracements can reverse at any level. This is why it is advised, and I'm sure you've heard this phrasing, always follow the trend. So if I enter a retracement, it means I'm going against the trend. But if I take trades that are in accordance with the trend, my profit ratio will be greater than my losing ratio. Hope you understand what I'm saying. If you don't understand what I'm saying, as always, you can leave a comment below. I'll make sure to reply to your comments. That's it for Euro USD. Look out for price to reach 1.0500 and begin a retracement. We'll go down to US30. US30 had the most momentum of all during this week. For US30, I expected price to come to 3400, but it did not come to the level. Like I said, price may not act in accordance with what you are anticipating. This is why it's good to be alert all the time. And whenever price gives you a signal, act on the signal. So US30 came to find resistance at this level here. If we look to our left, we can see the failure of price to break this level here. Price retraced back to this level, found resistance, gave us the bullish weakness here. As you can see, these two are tops here. We have a bullish candle here. Then we have a bearish candle here, meaning there's some indecision here. Then we have the bearish candle coming here, staying below the moving averages. I would have taken this trade if I was trading USDT. I would have taken this trade off these confluences because I expected price to come to this level, and it did not come to this level, but it found dynamic resistance on our moving averages here, gave us the bullish weakness here, then gave us a bearish engulfing candle, which is clear confluence for us to enter a trade. We also have a significant level here. We enter the trade. This one is actually a low risk, high reward trade. So if I was to enter this trade, it would be a short. I would enter it from here. Immediately, it gives me this bearish candle here. I would enter the trade here, place my stops at 3400, at 3400. My target price would be this last low here. A very good trade without wasting any time. Price dropped down and would have hit my TP clean. So as you can see, this is a good risk to reward ratio, a 1-to-3 risk to reward ratio, and it's US30. US30 has high spread, meaning it gives you more money. So like always, there is a risk and a reward to everything in trading. So if it gives you more money, meaning it can take away more money. So you always have to keep in mind good risk management. Without good risk management, guys, you cannot be a profitable trader in the long run. Trading is all about the long run. It's all about the numbers. It's a numbers game. It's not about a single trade or what. No, it's about a series of trades. You cannot make money off one trade and consider yourself a profitable trader, and you make a withdrawal and you're happy, or your trade loses and you become sad, and this emotional roller coaster that you go through. Trading is all about the long term. Make sure to stick to your plan, stay disciplined to your plan, and stay consistent in the markets, and you'll find out the numbers will always add up. And remember, always journal your trades to look at the statistics of how you are performing in the market. You can watch a video where I explain on how to journal your trades. I'll put the link to the video in the description below. Okay, now we go down to the dollar index. So for the dollar index last week, we closed here. We closed here at these bearish engulfing candles here. I expected price to reach 105. This has been my target price for some time now, and we eventually hit 105. So for now, we might start seeing some rejection, some retracements from the dollar index for buyers to start coming in. So we might see price coming down to 104.50 here because of this demand zone here. We might see price coming down to this demand zone here and begin a rejection. Let us see how price reacts. But for now, on the dollar, we might start seeing a retracement. So if the dollar starts retracing, our currency pairs and index will also begin their retracement. The dollar index correlates with the other pairs and index we trade. So everything is based on the dollar. The dollar is always king. Yeah, so price came to 105. Again, this week, I'm not expecting to enter any trades. But if price gives me confirmation to enter a trade, I'll definitely act on the trade and see whatever the market gives me. We stayed firmly at 104 here. In the previous analysis video, I expected price not to come break this level here, and we eventually did that. We just stayed at 104. You can see, let's look to the left. To the left, you can see here we have a support level here. So price came, found support at this previous support level here, and we shot up. Found dynamic resistance on the moving averages here, and we had this bullish engulfing candle here, confirmation for price to continue moving up. As you can see, guys, everything in the market is well structured. The market doesn't move randomly. Most of the beginner traders and struggling traders think the market moves randomly, but the market really moves precisely. It has a well calculated way of how it moves. So if you understand how the market moves, trading will be easy for you. And if you understand the psychology that you need to develop in trading, trading will be as easy as you thought it was in the first place, guys. Realize that Forex is all about the psychology, what goes on in your mental realm, more than what your strategy is about. Because if you are not right, the way you perceive price and the way you perceive how the market is moving will correlate with what is going on in your mind. If you're fearful of taking the trade because of the number of losses that you've experienced in the past, you will miss out on the move. And when you decide to open your trade, you find out that it is already late, and price has finished its impulsive move and it has begun to retrace. And where you have placed your stop loss is further away from a support level. So that's my focus for the dollar index, guys. If you have any questions, again, you can leave them in the comments below. I'll make sure to reply to every comment. And make sure to watch our video on where I explain how to journal your trades. Thank you for watching this far and hope you have gained value from the video. If you have gained any value from the video, don't forget to leave us a like, subscribe to the channel, and share to anyone that may benefit. Thank you and see you in the next video.